track along. Now, I've introduced the 55 tick on the Countertrend. So for those of you who have the Countertrend setup or the Countertrend system on your, which is the volume trader, this is just flying along on a 55 tick. So it just seems to be really doing very well. Now what I'll do is I'm going to just take a snapshot of these settings because there's a bit in the testing and also the settings on this particular. This is probably the biggest. This is probably the biggest strategy that we have. It's not really the most complex because all the strategies are fairly simple, but it has the most variables in it. And when I say variables, I just mean it has a number of different filters that can be used to take trades. So we've got the volume spike, we've got divergence, we've got the MACD divergence, we've got a double top, double bottom filter, and we've got a moving average filter. So the reason why we've got those filters in is so that that if you want to be very, very specific about what type of trade you want to take, then you're able to basically take the setups based on your filter. Now, what I've found is that the volume spike and divergence are clearly work the best of the filters. If you have all the filters turned on, you're not going to get a lot of trades because you're requiring a lot of variables to occur all at once, and some of those things just won't happen all at one time. But you occasionally will get trades. So depending on how often. Now, the advantage with the volume spike strategy is that it does have built-in money management, or I should say max wins, max losses. So it does have that function in there, so you can test on that. But what I'll do is I'll put together a little bit of a walkthrough video similar to what I did on the cycle trader and the other ones that will clearly explain that. So that manual was supposed to go today. It'll probably go out tomorrow afternoon, and that'll just have all of the videos and the settings in there just to give you a little bit more information. That's alright. Yeah, it's public holiday, that's okay, Karen. So really, this is the first time we've looked at the volume trader. So what I'll do, I was wanting to have a bit more of a look at the pullback strategy tonight, but I'll do a little bit of training on the volume trader because we haven't spent any time at all really looking at this strategy, and it's probably one of my favourite apart from the pullback. And so I'm going to take you through it. But before we go, just to recap, it picked up that nice long trade here at the start of the DAX session, and you can see it yielded a nice little profit up there. It got taken out on its trail just at the top there, and price is starting to consolidate here now. So we're getting some good consolidation, which we usually see around this time of the day anyway, because we're starting to come into what we call the lunch hour in Germany. So what would be interesting would be to track the lunch hour, because I've just been doing some testing on gas as well on the on the cycle trader, and that as well is pulling some pretty good numbers for the cycle trader. So that's during that lunch period, 12 till 2, as we've seen on crude. So that time of the day seems to be really consistent with having basically that type of. Let me just turn that Skype off. I can't really take. I'll just close that off. That time of the day is an excellent time for trading markets that are potentially going to consolidate during a period which tends to happen during the lunch hour. So a little bit of information about the cycle trader. The volume trader, just to give you a bit of a lead in. So as I mentioned before, what we've got is we have the 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 system is set up, so it's got a basic trend line that we run on it. So we've got our trend line similar to the pullback. So if you were in last night's trading, you would have seen this and you would be familiar with the trend line. We've got the candles on the chart. We can convert that, instead of candles, we can take that to price bars. So some of us prefer price bars, some candles, so it doesn't really matter. Whatever your preference is, we can kind of work that into the strategy. You can just adjust that accordingly. The key for the system is really these bottom indicators. So what you've got is you've got a volume, what we call a volume spike. Now, you would have probably heard me talk about this before, but from the exchange, so if we look at information from the exchange and stuff that's being delivered to our platform, the key pieces of information that we get, or the only bits of information we get from the exchange, are price, which is reflected in our price bars or our candles. Volume is the other piece of information, which is information being processed at the bid and ask based on orders, and the size of the trade, so the number of contracts being traded. That's really the only information that's provided from the exchange. Now, most of the indicators that you work with or work off, or you've got plugged into your machine or on your platform, are based around price. So I would say 80%, 90% of those indicators run off price alone. So is there a lot of value in having 4 or 5 indicators that run off price? Not really, because you're just getting the same information but just in a different format. So what we want to do is we want to have a couple of key indicators that give us an idea of what's happening with the momentum of the market, where potentially we can take advantage of what's going on as far as volume, price, and as we go further into our trading, also the size of the trade. So that's another key thing that we want to kind of look at as we progress through this program. So at the moment, at the bottom of the screen, we've got volume spike, volume divergence, and we've got what we call the double top, double bottom indicator. So that double top, double bottom is just a way of saying, right, well, it's almost like a support resistance indicator that tells us, right, well, you've actually got an area where you've got a bit of support. So as far as price action goes, now previously we were using the Renko bars, which are really good at showing you visually where support and resistance are, and you can still run the Renko side by side with this, and it's a great way of visually seeing where support and resistance is. But if you want to keep your chart to the absolute bare minimum and you only want to visually see one strategy on your system, then you might decide, well, I'm going to stay with the candle bars or price bars, and I'm just going to use a very, very basic format and strategy to trade. And remember that each one of the strategies we've developed, like the cycle trader, the pullback, the deep pullback, they're all very basic. They're basic, but they're simple, but they work because they've got a positive expectancy. They've got that excellent reward to risk, and they rely on basic price action, and as we can see here, volume as well, to take advantage of repeatable patterns that occur in the market, and also to trade our edge. So with our strategy here, we're looking for either a volume spike, so where the buyers or the sellers are being exhausted in the market, so that's where we see a volume spike. So we might see potentially a huge volume of huge spike in buying or selling volume, and that usually is the precursor for very, very poor momentum and follow through, particularly if you get divergence that accompanies that. So directly after that volume spike, you typically see price or volume starting to run out for the buyers or the sellers, and that's telling you that the fuel that drives the market, which is volume, is starting to really kind of reduce, and basically the market's starting to lose its momentum and traction. So as you can see here, we see that we get for the sellers are taking control here. They're pushing price down. You can see here that the sellers, we've had a volume spike. We've also got divergence here. So what this information is telling us, without knowing what's on the right hand side here, is that we're ready for a possible buy setup. Now that buy setup is confirmed by the fact that we've also got a nice little prices making a double bottom, so it's finding some type of key level support, and you can see that by trading back above the key level at 7,300, that we're strongly pushing back to make a run above that level. Now, with volume divergence and that previous spike from the sellers, it's telling us that really the sellers don't have a long way to go here. They've just run out of the fuel that's going to drive them lower. So we should be looking for a potential buy setup, and that's why we've got our cyan. So remember, our cyan is always going to be representing buyers in the market. So with our trend trader, our cyan candles tell us that we're in a buy trend. Well, it's the same for this strategy here. When we see the cyan dots at the bottom on volume, it's telling us that we should be getting ready to buy this market, because the sellers have just lost control of the momentum lower, and that we're looking for a potential buy. Now, crossing the key level at 73, also crossing the our trend line here, tells us that our dynamic trend line tells us that that we have kind of a lot of things going for us in relation to the entry. We've got volume spike, volume divergence, we've got a double bottom here, not a perfect double bottom, but we have a base, and we also have price going through the key level, and we have our trend line or our dynamic trend confirming that that we can potentially get on the buy side. So if we were looking for a checklist of entry points, we've almost got every single tick there, and that's a perfect buy setup. So you can see the market drives up, and it doesn't really falter in its run up. So yesterday, when we were doing our training, we were looking at pullbacks in the market to get back in on the trend. Well, this one doesn't really give us much of an opportunity to pull back. When it does pull back, it's really at a point where the market is kind of lost its momentum for the long side, and you can see here that the sellers are now starting to potentially take control and work this market down, and it gets taken out on the trail. So with now this is on a 55 tick, so it's going to move a lot quicker than say the 89 or the 144, and the advantage to having the smaller tick chart is that you've got smaller trades. So with the DAX, it's an expensive market, so we want to keep our risk fairly low. That's our goal. We want to make sure that our risk is small, so we're not taking on too much risk in the market. And the advantage to the 55 tick on any market you trade will be that it'll reduce your trade size, but it'll also mean that your trades will be a lot quicker as well. So there's always going to be a positive and negative to reducing the size of the ticks that you're trading. And you can see here consolidation, and then we get a bit of